Good morning. It's Saturday, September 8th, 2018, 10:17 a.m. on the East Coast. A little earlier this morning. I seem to have hopped out of bed a little bit before I usually do on a Saturday. Um, I want to talk about a few things first, not necessarily the charts. There is a report. There's a story going around in the precious metals community, talked about by Eric Sprott on his weekly wrap yesterday, about silver, American Eagles. The U.S. Mint has run out of silver American Eagles, and so they can't fill any new orders for a while. And basically, what Sprott is saying is, well, the price is lower now. They're saying that this is the price, but when you go to buy it, they're sold out, so you can't buy it at that price now. Well, you can buy silver maple leaves. You can buy, you know, Australian silver coins. You can buy silver bars. So if you really want to get your hands on silver at this price, $14.10 an ounce, you can. You can also go to a coin dealer and buy, existing silver American Eagles. What happened is uh, there's not been a lot of interest in buying silver or gold coins for a while now. Basically, the last couple of years, sales have been dropping. So the mint only made a certain amount of silver, 1 ounce coins, basically what they thought they were going to be able to sell. And now with this price drop, suddenly there's a lot of new interest, and that this is a low, so they want to buy cheap. Makes sense, rational buyers, and they just don't have the supply available. Simple story, not a conspiracy, no ulterior motives. The mint wants to sell as many coins as they can, but they don't want to make too many, obviously. Um, Simple story. Doesn't need to be overly read into and analyzed. Really, very, very simple story. If you want to get your hands on some silver and you've got some cash, you absolutely can get your hands on silver. There's no shortage of silver. Anyway, so moving on. This is the gold chart, and I think that the performance of gold on Friday is actually quite noteworthy. I mean, it dropped $3.90. Futures closed at $1,200.40 an ounce. So in that sense, it wasn't particularly noteworthy. But when you look at what happened with bond yields, the 10-year Treasury yield was up over 6 basis points, and the dollar was also up on Friday. So typically, in a scenario like that, where yields are rising and the dollar is strong, after a relatively good, strong jobs number in the U.S., I would expect gold to be down $15-20 an ounce. It was down $3. Okay, and it actually held above $1,200 an ounce. Not a whole lot to read into this price action down here, but we're bottoming. I mean, this is this kind of price action that you see in a bottoming process. Does that mean we're going to go straight up from here? Absolutely not. We might have to retest this low in the 1160s from August 16th. Quite possible. Or we could just continue to chop around and then make a move higher. There's a few ways that this can happen, but in my analysis of this situation here, I think gold is in a bottoming process. The US dollar continues to trade around 95 on the dollar index. Not a whole lot to say here. It's stronger than I would have thought. I'll say that. And the chart is generally pretty positive. But I don't really have a forecast on the dollar index here. I think that it could absolutely go up and test the highs near 97, or we could break down through 94. I don't really have a strong read on the dollar. I don't trade the dollar. If I were to just make a call based upon this chart, I would say higher first and then lower, but not a strong read on the dollar at all. Crude oil. So we made a trade on crude oil last week, using an exchange traded fund to short it. Worked out nicely. Now, I want to look at this daily chart. You can see there's some bottoming tails on these last two daily candlesticks. So it looks like there's some strong support at 67. WTI ended the week at 67.75. We have a rising 200-day moving average and a flattening 50-day moving average. So the longer term trend is up here, but all of this price action since May is basically sideways. Crude has gone nowhere. I mean, obviously it made a high up above 75. That looks to be a pretty substantial top, okay? And I want to point out, and this is something that I was harping on the index this week, is that narrative follows price. So what that means is, especially for crude oil, the price topped 2 months ago at $75 a barrel. But the narrative, the bullish narrative, keeps going now. There's all these reasons to be bullish, but you know what? The price action has started to move lower. Only when crude breaks to like new multi-month lows, let's say under 64, will the narrative turn bearish, right? So the narrative is still mostly bullish, but when price starts to make new lows, it will turn bearish. It will follow the price action. And we see this time and time again. We have a bearish narrative in gold right now because we've had negative price action. But if gold moved back above 1300, a few months from now, we'd have a new narrative that it's bullish and we have tailwinds, et cetera, et cetera. So the narrative in markets always follows price, and you need to really be aware of that to not let it bias your trading, okay? Because the narrative is generally just noise. You should have your own narrative based upon your analysis, and honestly, it should be mostly based around the price action. So WTI, I think it's probably in a range for now. Longer term, though, so like months from now, I could see us breaking down under 64. And actually, I showed the head and shoulders chart in the trading lab earlier during this week. But this could be, construed as a head and shoulders topping pattern. Again, just because a left shoulder, a head, and a right shoulder have formed doesn't mean it's a bearish pattern yet. A head and shoulders can be a pattern in an uptrend, okay? It could be a pattern of oscillation, within the context of a larger uptrend, which is what we have in crude oil right now. It's only when we break the neckline does it actually turn into a bearish pattern that has, triggered. It only triggers on the break of the neckline. But that being said, this pattern is now really well formed. So we need to watch this 64, 65 area, especially because there's a 200-day moving average here. This is getting to be very interesting. So WTI crude oil is a chart that I want to keep a close eye on here. I think it's very interesting. It could give us some tells on the global economy and the broader, markets as well.